Thank you, Kelly, and thank you, Dennis. 54% gains year to date. A lot of that based on optimism about the overall capital markets environment. You said on your presentation earlier today at the Goldman Sachs Financial Services Conference, where we're at right now, that the industry is expected to have its second biggest M&A year in history. How much of that upswing is Goldman capturing, and do you see it following through into 2026?
Leslie, thank you very much for being here. This is our 36th financials conference. We have record attendance across issuing and investing clients, so very pleased to have you. We're definitely optimistic. The facts are that this should be the second highest year for announced M&A volume. We've already announced $1.5 trillion of M&A activity year to date. And if I think about the level of engagement that we're seeing from our clients and the type of activity and ideas that they are generating, my expectations are that we will see that momentum continue into 2026.
Now, a big piece of that puzzle that hadn't really been turned on for much of the year was the sponsor activity, the private equity community. We hadn't seen as much. That has changed. That flip has switched. You said that that's finally picking back up. What's been the big unlock here, and how much does tomorrow's FOMC meeting matter in terms of just financing costs and the level of rates?
So, activity by sponsors had been muted the last couple of years. Combination of them sort of picking their moment to actually monetize assets in their portfolio. We've seen equity markets rally. We've seen a lot of the underlying assets perform, and they're seeing an attractive opportunity to exit some of those portfolio companies. So we've seen a 40% uptick in sponsor activity. It's also the case that the equity markets are open again, and sometimes that provides better demand tension as they're looking to monetize an asset. They can see whether or not to take it public or whether or not to sell it to a strategic. And so those things working in tandem can sort of be virtuous and unlock, even more activity.
And so you think that will drive 2026 to be potentially even higher than this year?
I think 2026 could be a record year for M&A.
Wow. Record for M&A.
Yep.
And that is incumbent upon, what things holding from the pipeline.
Well, if you think about just the mindset of clients right now, this is a moment in time when almost every single company in the world is asking themselves the question, what do we need to do to grow? What are our strategic imperatives? And there's a sense of optimism that it could be doable, that it's achievable. And so people are asking what their dream deal is, what's the ideal industry construction, financing markets are open, macroeconomic backdrop is supportive, regulation has been a bit of a tailwind. So there are a lot of things coming together that create an environment where you can see more strategic activity. Given we've been the #1 M&A advisor for 20 years, we're getting a lot of that inquiry, and clients are turning to us as their trusted advisor to say, how are we going to actually execute these ideas that we have for our business? And very exciting time.
You've been a participant in the deal machine as well. Goldman just announced a $2 billion deal for Innovator Capital Management. That's an ETF sponsor, a $1 billion investment in T. Rowe, and a $1 billion for VC firm Industry Ventures. So clearly a big use of capital for the firm in recent weeks. Should we expect to see more deals?
Well, overall, we're looking to really grow the durable revenue streams within our asset and wealth management business. We have the 5th largest active asset management firm inside of that segment, a leading alternatives platform, and the premier ultra high net worth franchise. And we've been driving the durable revenue growth, which we're now looking to accelerate. And in those 3 examples, we basically saw opportunities that we could take on board a capability or a segment or a product that would help us accelerate the growth of those durable revenue streams. Each of them sort of a bit bite-sized in nature and important to accelerating growth in asset and wealth management, which is our strategic focus. I think if we see transactions like that, we would continue to consider them, but the bar for something significantly more transformational would be a lot higher.